the way I tend to see trading psychology these days is, I mean, firstly, you've got to have a base level of self-awareness and capacity to leave your ego at the door. I've written a curriculum I call it self-care, which is basically self-compassion, self-awareness, self-regulation, self-expression, and what that enables. It's a series of it's a progressive meditation experience that helps people to get to a place where they can kind of press an emotional reset button on demand, if you like, so that they're not bringing all their baggage with them, their past experiences and their past hurts and failures and whatever, to their decision making. It's a way to kind of look at uncertainty and not be overwhelmed by the anxiety associated with uncertainty, but actually to be free and curious when faced with uncertainty. But anyway, so over the years, I developed a process for myself which enables me to do that. I can press a button and clear my crap, and I find it helpful. It's not just helpful for decision making around trading. It's actually helpful in life. What I've experienced with people coming to me and saying, look, I'm tripping over myself all the time. I'm making poor decisions, and then greed and fear gets in the way, and uncertainty, and blah blah blah. So all these emotional issues getting in the road of their decision making. I say, well, yes, there's that base level of do this program, and that'll definitely help you to kind of find a base rate, emotional base rate for you to be able to be more objective and to learn more about how you respond in certain circumstances, how it is that your past is actually impacting present decisions and emotional experiences and all that. That's a base, like that's important. But actually, if you don't have good process as a trader and investor, and it's, we're not talking just traders here, Bushy, as you know, in investing generally, if you don't have good process, that leads to poor mindset.
Yeah.
It leads to all these emotional pushes and pulls that get in the way, and then you sort of think it's just the emotion that's causing you all the grief. Actually, no, I would say 8 times out of 10, it's poor process that leads to poor emotional outcome.
Welcome to the Get Invested podcast, where we share great conversations with experts from all walks of life to uncover their secret know-how and where they invest their time, their skills and their money, and the benefits that this has created. You see, the truth is that everyone invests. Every minute and every day, we're investing our time, our skills, our energy and our money in something. Some of us are investing consciously, some unconsciously, sometimes for good, sometimes for bad, sometimes for no impact. Get Invested will help you to start living by design, not by default. I'm going to help you to make it happen, not let it happen. You will hear the top tips on how you can live with conscious intent so that you can live more, work less, and leave a living legacy by investing now. Listen to the show to discover the top tips on how to get started, make the most of your investment journey, and ultimately to be living your dream, not someone else's. More episodes can be found on iTunes or at bushymartin.com.au/get invested. Thanks for listening, and now let's get invested.
Hi, freedom fighters. Do you feel like the world of investment's gone crazy and is losing touch with reality? On one hand, economies are struggling, but on the other, asset prices are soaring and going through the roof. The values of Bitcoin and stocks like Tesla have shot up exponentially, almost defying all logic. And tribes of social media-led herds of inexperienced or first-time investors are driving up the stock values of very low-performing and dying companies like GameStop, driven by fear and greed. And there's even been a case of a bankrupt company seeing its share price increase 5 times in no time flat. What is this speculative madness and where is it heading? How do you make sense of it? And what do you do? Who and where do you turn in order to guide you safely through this radically uncertain and dynamically changing investment world? A world buried in opinions from instant experts creating a constant stream of screaming noise. where you can't separate the fiction and the fantasy from the often hidden facts. How do you take advantage of the opportunities while minimising your risk, and at the same time remain calm and in control in the face of your growing anxiety? The answer is always, it depends. It depends on who you are, what position you're in, what type of trader or investor you are, your risk tolerance, what goals and aspirations you're trying to achieve, your timeline, and aligning all of this with what's happening in the market. And this is no easy task. As you heard in the opening snippet of today's conversation from our guest, it all revolves around your self-care and the quality of your investment process. Now, world-renowned billionaire investor and American hedge fund manager Ray Dalio recently said that it's harder to be really successful in investing than it is to win a gold medal at the Olympics. So today's guest, David Hobart, is just the man to help you do that. Now, over the next couple of episodes, we're going to help you to make sense out of the current craziness and how you can better deal with the inevitable rollercoaster ride that always has been and will continue to be the world of investing and trading. And today we start with the new and improved format that recognises and celebrates our guests' insights and learnings without my extended intros obscuring them or getting in the way. Instead, every month I'll record a special dedicated standalone bushfire episode where I'll expand freely and deeply on current topics of interest that'll give you timeless takeaways to help you get invested so that you can achieve your version of sustainable success. So keep an ear out for this in the next episode, where I'll be delving into what you need to know and do in the world of investing in our shifting new age of persuasion versus the old world of performance. Today we start your new awareness with the guidance of proven investor and trader David Hobart. David's a performance coach with a specialist background in investment management. He's been an active trader and hedge fund manager since 1994, where managing risk through uncertainty has informed the development of his coaching programs. David's work with executives and professionals whose decisions have consequences, whether they be human or financial. And he's got three key purposes: to improve performance by focusing on optimising outcomes, to facilitate change by aligning your beliefs with the desired outcome, and to enhance your well-being by improving self-awareness to illuminate biases and attachments which inhibit objective decision-making. Now, David's been coaching since 2006, but he also spent 5 years as Managing Director of hedge funds at BlueSky Alternative Investments and 9 years as Managing Director of Apeiron Global Macro Fund. In our very open and reflective discussion today, David shares his insights and touches on what are the biggest mistakes that equities investors and traders make, what are the keys for successful investing in equities, where do you need to start with investing and what steps should you take, how can you build the best portfolio to suit you, why it's critically important to dial yourself into the game, maintain flexibility and ride a trend, why having a coach is absolutely critical to your success, and I can certainly back that up. And we touch on the difference between alternative beta and alpha trading approaches. We gauge his views on the latest crypto mania and the recent GameStop Reddit herd trading phenomena. And I just love his story about how he bought Bitcoin back in 2015 and sold it to design and build a an absolutely beautiful property on Tamborine Mountain that featured on one of my favourite shows, Grand Designs Australia. David's a very deep and humble thinker, and his open, humble and self-deprecating manner often downplays the tremendous investment success he's achieved personally as well as helping others. And one of his great unique contributions is his self-care program. When making decisions that have consequences, whether they be human or financial, whether we realise it or not, it's important to view our current circumstances unobscured by our emotional filters derived from our past mistakes. And in the investment world, we've all made decisions that have led to losses. Now, even if these decisions are made within a sound investment process, they can leave us in a place of ruminative reflection at times, as David says, which can negatively impact on our future decisions. So David's unique self-care process provides you with tools for clearing emotional attachments on demand. Think of the output from this process as an emotional reset button, as he so well describes. You'll have access to a means of clearing any emotional turmoil obstructing your path to clear decision making. The revolutionary self-care process provides you with on-demand tools to free your mind from attachments, enabling you to view the world as it is, not as you wish it to be, to remove emotional baggage from present circumstances as past experiences that often leave emotional residue. And it's often this residue that colours our view of the world. It also allows you to make decisions based on the reality of the present and the future that you're creating. Your decisions can be informed by the past, but not dictated by it. Self-care also helps you to experience the joy of living in the moment. Knowing that you're clear of the past is often expressed through an overwhelming experience of gratitude. And when gratitude is all that's left, then you know your emotional reset button has been pressed. Now, as a special bonus for a select few Get Invested listeners, David's offering complimentary access to his unique self-care program. So just email me at bushy@knowhowproperty.com.au. That's bushy@knowhowproperty.com.au if you're serious about taking your investing to the next level. And before we get into our engaging chat, if you'd like to optimise your performance in property investment, we're taking investors to new heights in our Freedom Flight program. To book your ticket or to find out more, I've added the direct link to the show notes, which is knowhowproperty.com.au/strategy/Freedom Flight program. Or just jump onto our website at knowhowproperty.com.au. But now, enjoy this really informative and engaging chat with David Hobart. Hi, Freedom Fighters. Now, if you're an active investor or a trader, you'd be excused for thinking that the world's gone completely mad in recent times, with equities, property and cryptocurrencies reaching record-breaking highs. So to help you make some sense from the madness, what better person to talk to than a successful trader, a hedge fund manager, and an investment coach who's personally invested successfully in crypto to pay for his beautiful home in the Tamborine Mountains in Queensland. It was actually featured on Grand Designs, which I'm very jealous about. So welcome and let's get invested, David Hobart.
Well, thanks for having me, Bushy.
Mate, really looking forward to having a deep dive today. You've come very highly recommended from some industry leaders that I've got a lot of time and respect for. And so looking forward to sort of jumping into a bunch of subjects. But, mate, for those who don't know who you are, can you start by giving us a bit of a rundown on who you are, what you do, and most importantly, why you do what you do?
Sure, Bushy. So basically, I'm a performance coach to investment professionals, so investors and traders. I guess I've done that for the last few years, but I've been a trader personally and an investor since I started out with the investment banks in Sydney back in 1994. So I've been sort of at it for a while. And I guess why do I do it? Well, I mean, I'm at that stage in life where it's nice to be able to contribute. I mean, it keeps me sharp. You know, I have to learn new things. You know, it's that old adage that the best way to learn stuff is to teach it, if you like. And it's not that necessarily I'm a teacher as a coach, but I certainly learn a lot of stuff along the way. So, I suppose that's why I do what I do. It's nice to be able to contribute, yeah.
Yeah, and you make a really good point there that, if you have to teach something someone else, then you spend a lot more time making sure that what you think's right is right, and you learn a fair bit yourself on the journey. So it must be pretty rewarding in the work you're doing in that area, I would have thought.
Yeah, no, definitely. I mean, it is nice to be able to, hold people to a standard, if you like, that they set for themselves, but at least be able to see them as the best version of themselves and then hold them accountable to that. And that's, I guess the essence of coaching, really.
Yeah, spot on there. You make a really good point in relation to helping them to see the best version of themselves. We'll dig into this in a bit more detail shortly, but, would love you to talk about how you get them to crystallise that vision of what is their best version, because in some cases that would be its own challenge, I would have thought.
Yeah, it is. Actually, I mean, sometimes I end up with having conversations with people that are pretty committed to becoming a better trader or a better investor, and it turns out actually that they're probably putting their energy in the wrong place. But it's not for me to determine that. It's for them to determine that. And effectively, all I become through those preliminary conversations is a bit of a mirror where, I just ask some leading questions that actually get people to evaluate what it is that's important to them, what it is that's, they hold most valuable to them, what are their goals and aspirations, and see if we can find some alignment with actually what they're good at. To what it is that they're trying to achieve. So, in that respect, that part of the coaching process is fairly, I guess, garden variety coaching, really. But, it's an important part of the coaching process.
Yeah, spot on. Yeah, we'll dig into that shortly. What I'd love to do now, if we can, mate, is to get you to talk through your journey so far and focus on what you've invested your time, your energy, and your money on over your journey to date, and sort of focus on, in particular, if you can, what you've invested in, why you invested in it, where did that get you to, what did you learn from it, and how has that led you to where you are now? That's a big question, I know, and it'll take us 20 minutes to go through that, but would love you to take us on that journey, because there's a lot of learnings that come out of that discussion, if you don't mind.
No problem. Well, actually, I think I'm a pretty reasonable example of someone who has to be experiential in the sense that I've got to be the one to do it, which consequently means that I've probably made more mistakes than your average Joe, which, I've got a few cuts and bruises along the way. So I don't know. I started out wanting to be a trader simply because I read it in year 11 economics that, short-term money market dealers actually make a whole bunch of money. So I was completely money focused. So I did an economics degree, and then I did a business degree in finance, and got myself a job with an investment bankers trust in Sydney as a graduate on the foreign exchange desk, and kind of that for me was what I'd been working on for a few years. But it is funny, I turn up on my first day, and I sat down next to last year's graduate, and he was the assistant on the Aussie dollar desk in a foreign exchange dealing room, and the Aussie dealer at the time was having an argument with him, and anyway, it ended up getting physical. This last year's graduate. This is my first day at work. Last year's graduate got clocked on the head with one of those old heavy plastic telephones. So I actually, worked for X number of years to get to my dream job, and I sat down and within 5 minutes wondered what the hell I was doing there.
Mate, that would be a big shock to the system. Where did it go from there? The last year's graduate, he just turned to me and smiled, and just sort of had a little giggle and got on with it. And it's being a foreign exchange dealer back then was a bit like being a fireman, where you sit around all day reading the paper, and then all of a sudden it's on, and when it's on, it's like high intensity, like you see on those Wall Street sort of movies. And so
in that moment, it was a high intense moment, and there was an argument about, well, I won't get into the technical details, but he had to, the assistant needed to know the dealer's position, how he was exposed in the market, given how much the market was moving. And of course, the assistant was right in the end. Couldn't afford not to be right. I mean, I would have hated to have been in that environment and been wrong.
Yeah.
Because, in the end, you had to be fast on your feet. You had to think, and you had to keep your ego in check, because it wouldn't have done me or him any good to hurl abuse at the Aussie dollar dealer in the middle of a very busy part of the market.
I often wondered what it must be like in the cut and thrust of that sort of environment, because I'd never been in it, David, but I can imagine that as a BT trader or a trader for any of the major investment houses at that time, there would have been a lot of pressure on you to be active in the market, regardless of whether you thought you should have been active on trades or not. And that pressure in itself, I would imagine, would have created some pretty interesting challenges. What was your feel and read of it in those terms?
I mean, that's a fair read, Bushy. There was always pressure to perform, and sometimes the opportunity was less than the pressure applied. So that did create conflict. That ultimately came down to time frame, really, of your sort of investing strategy. So if you were a very short-term oriented trader, there's always opportunity. And I started out on the spot desk, which is a short-term trading environment. Yeah. So it wasn't hard in the first instance, but as I moved, it became fairly obvious. I actually I wasn't a short-term trader's shoelace, so I kind of evolved to being more strategic, if you like, macro oriented, and I moved on to the proprietary trading desk, which was much more suited to my disposition, which is just a little bit more reflective, I guess, than a spot trader.
So was that something that you recognised or they recognised? Because I think you're touching on something that's important to the listeners in recognising, well, what is my style? How do I think and work, and how quickly do I act? And therefore that needs to be taken on board as a fairly major driver for how they invest and what sort of a system they develop around that.
Yeah, I mean, it was probably both, but I mean, I could easily say that when I was learning to be a trader, a spot trader, when the spot traders would go out for lunch, I'd have to look after their book.
Yeah.
So, and it was almost like they didn't want to go out for lunch because they knew that I'd lose them money as a spot trader. I mean, I'm exaggerating, but that was a little bit like it. So, I was getting. It was reasonably obvious that I thought of things not in the not what's going to impact the price in the next 1 minute. I was always thinking about what's going to impact the price over the next day or over the next week, which in a spot trading environment was quite long term. So it didn't sort of take too much for all and sundry to work out that I was going to be more suited to price taking versus price making, if you like.
Yeah.
It was kind of a mutual thing, but you had to go through the learning process, and I think the learning to trade and learning, bid and offers and price action and what are the drivers of supply and demand and how humans react to fear and greed and what impact that has on price, all that stuff was really important to learn as a spot trader and sitting on the spot desk in the heat of the moment. It's the best place to learn it, and I was very lucky to be able to have that experience. Yeah,
good point. I mean, if you're having to make decisions quickly and constantly, then you're going to learn. You're sort of turbocharging the learning experience to a fair degree in terms of the fundamentals. So probably an excellent breeding ground from there.
Yeah.
So you made the move. Where did that take you to, and what happened from there?
Well, I mean, going from short-term spot trading, like on a heavily traded currency pair like Aussie dollar or dollar yen, was one thing, but then, the transition to becoming a proprietary trader, I ended up managing the European currency desk at BT, which was more sort of in between, where you'd have to make prices for European corporates in the middle of their night. So I'm sitting in Sydney, so the Asian time zone, and there's no prices for currencies like it was. The Deutschmark was the major currency in Europe, so Deutschmark against the Italian lira or the Spanish peseta or Portuguese escudo or even the British pound or the Swiss franc. So there was all these European currencies that I had to make prices for corporates, so bank customers, when there was actually no market. So I'd have to sort of make up where I thought the market would open in Europe, 5 or 6 hours later.
Wow.
And that enabled, it did a couple of things. One was you had to think about the fundamentals. So what was actually the things that were going to drive prices over the next 12 to 24 hours.
Yeah.
But two, it also framed a way to manage risk, because, you'd end up getting these big exposures. So sometimes, an Italian corporate would ring up and want to do 100 million Deutschmarks against the lira, and you had no mechanism to clear that risk during the day. So you kind of had to put your proverbial on the block a little bit. That it helped me to sort of be able to take more risk, but calculated risk, understand how to manage and mitigate it as best you could in an illiquid market.
Yeah.
So that was a segue into actually taking more directional risk and sort of managing a part of the bank's balance sheet as a proprietary trader, where I moved into not only currencies but commodities, equities, and interest rates. So sort of broadening the remit, if you like, or at least the available markets that I could invest in while working for the bank. And taking more directional and longer term risks. So from 1 week up to sort of 3-4 months while sitting at the bank, which still doesn't sound very long term, but for a trader coming off a spot desk, it was quite a shift.
A really great broad spectrum there of exposure to a whole series of different facilities, which must have been a great grounding for where you went from there, I'd imagine.
Yeah, definitely. Sorry, go on.
Yeah, so talking about that then, where did that lead?
Well, I worked for a couple of banks doing as a senior proprietary trader. So BT got bought out by Macquarie Bank, so I worked for Macquarie Bank as a prop trader, prop being short for proprietary trader, which is just someone that manages the bank's balance sheet or a portion of it. And then did that for ABN AMRO, so another Dutch bank, as a proprietary trader in fixed income, so trading fixed income and currencies for ABN AMRO. So, I did that for a while, and then I actually left ABN AMRO and moved to the Gold Coast to set up a financial services business, because I'm from the Gold Coast originally, Bushy, so right. I grew up there, and, at that time my kids were sort of 2 and 4, or maybe 1 and 3. And my wife and I always decided that we wanted to be back close to grandparents and that sort of thing by the time our kids got to preschool age. So we moved back to the Gold Coast, and I set up a sort of a retail financial services business, which is a sort of like the yellow brick road model, where we had a financial planning business, and we had a mortgage broking and budgeting, and we also had a precious metals part to it. So there was sort of investing as well as financial planning and mortgage broking, and so we set up this sort of prototype shop front, and that's why I referenced the yellow brick road model, because it was done at street level and trying to sort of provide those advice and financial services for mortgage belt Australia, as opposed to high end, which is what typically financial planning services had been catering for the people that actually had decent sized investment balances, etc.
It would have been fairly groundbreaking at the time, I would have thought.
Well, it was actually bank balance breaking, being the truth of it. We actually copped a beating. Right. I didn't have other investors in it, fortunately, so it was all our own money, and I sort of went from rooster to a feather duster in about 2 years. which was, unpleasant would be a reasonable way of putting it. But basically, we lost all our money and some, and then it sort of took me some years to sort of dig my way out of the hole I dug for myself.
Would have been pretty challenging times, both personally and professionally then. What were some of the key learnings that you took from that experience, mate?
Well, I mean, I think at the end of the day, probably a couple of things. One was that, I sort of walked in there back to the Gold Coast. I've arrived, expecting the world to sort of come to me and to give me their money to invest, because I'd been a trader for investment banks, and firstly that didn't work. So I didn't have much in the way of humility walking in, and by the time if you get beaten up for long enough, well, humility is a byproduct. So that was important, and I think my life to that date had been fairly blessed in the sense that I'd had some fairly easy success through various things growing up, in sport or at school, and then at uni, and then working for sort of dream jobs, dream banks, etc. So life had been pretty rosy, and I copped the old kick in the proverbial through that experience. So it was humbling. But I think probably the biggest thing I got from it was actually to like my wife and I, it's the best thing probably ever for my wife and I, and for our kids, it's probably the best thing. Not the actual time spent losing money in that business, but subsequently where we didn't have the money. I mean, I would literally for almost 10 years say to my kids no to just about everything, whereas prior to that experience I would have said yes.
Yeah.
And also my wife and I mean, she's the chairman of our investment committee. I don't do anything of significance without her blessing, whereas at that time I just managed to lose all our money without even asking her. So that's been wonderful for our relationship, and it's actually been wonderful for my investing, because she is a check to my ego, and actively invited to be such.
Yeah,
so
love it.
Yeah.
Mate, I love it, because I'm in exactly the same relationship with my wife. We're life partners and partners in everything we do, and the yin and yang is just the perfect balance. And you use that word, the sort of ego check. It's mate, absolutely so true. And that level of intimacy and connection that flows through all parts of our lives is I know has become a big part of the reason why we enjoy the life that we now do.
Yeah, great.
And it sounds very much like you've been on a very similar journey, which, as you say...
Yeah, and I mean, the growth for her is great too, right? Like, I mean, every relationship, as you know, takes two people, and Sarah at the time didn't have a voice, and and I can blame that on myself, but she recognises that she didn't step up when it was there for her to step up, and now she does, and it's just wonderful. So it's really great that she's grown into someone that holds me to account, and so both of us have grown through that experience in equal measure, and it's been great.
Yeah, awesome.
But
awesome.
But you wouldn't wish it on your worst enemy, because it wasn't pleasant.
When you're scrimping and saving for every last cent, it's never easy. But it's amazing the great life lessons that come out of that hardship versus the cruise ride that you just. There's no reason to even broach some of those things.
Yeah, sure.
So where did that then lead to? So it got a bit interesting. What happened from there?
Well, I mean, I have this sort of context that actually my cousin, we used to play lots of Monopoly together, and this isn't just as kids. This is actually, as adults play lots of Monopoly, and
yep.
He would beat me every single time, and I could never work out why. And we sort of one day he came and stayed. He's from down in Geelong, but he came up to our place in Brisbane at one point, and we played a day of Monopoly. So we must have played 6 or 7 games in a row, yeah. And after 6 games of him beating me every single time, he's like, "Mate, you're not very fast, at learning this. Like, what's missing? And I'm like staring at him going, I don't know what's missing. I can't, all I need is for that, I just needed a 6 and I would have got the full set. And, and he's like, yeah, exactly. Like you're not dealing yourself into the game. And I was like, oh, what do you mean by that? Well, like, okay, you've got 2 greens and you've got 2 light blues, but you're sitting around waiting for the other one to pop up when I've got an equal probability of landing on those properties. So you've got to do a deal with me, mate. Like even if it's a crap deal, you've got to do a deal. Otherwise, you're just sitting around waiting for the dice to roll your way, and that sort of isn't how life works. And I was like, oh, right, okay, that makes sense. So next game, I just did the worst deals I could possibly have done, and I ended up beating him, right? Anyway, so that's a segue into what I did next, which is like I had this context. Well, I've got to deal myself back into the game because I've got this, blister, 150 grand in debt, no assets, 2 young kids, wife, and at that time, no income. Like that last business, I was pitching to Centrelink one day, and that was a Friday to try to get their business. And then on Monday, I'm standing in the queue, having folded my business and going, what the hell happened? So anyway, so that's basically what I did. I went, okay, I've got to deal myself in the game. So how do I, 1, I need to find an income, and then 2, I need some sort of upside, some opportunity where I can get equity in something and, start to build again, because right here I'm kind of cactus. I'm 150 grand debt with no assets. I'm going to be paying this off forever. So, that's what I did. I got a consulting gig, and the guy I did some work with, he had a FX trading fund that he needed some risk management around, so I was helping with risk, and then he needed a financial services license, so I went, okay, well, I can help you with that. And then I, niggled my way in and got some equity in that AFSL, and then, I said, well, okay, now we've got the license, I should get back into the trading business, so I ended up setting up my hedge fund at the time, which he helped fund and set up, and I had a little bit of super, so I was able to invest a bit of my own super into the strategy, and basically, we grafted and, scrapped, but I had some equity. I had some upside, so at least I had that experience of going, okay, well, I'm earning just enough to sort of keep food on the table, but I've got some upside, so I can work with that. So that's kind of what happened.
So continue the journey, mate, because virtually coming from ground zero, or actually behind ground zero.
Yeah.
And I'm very familiar with what you're talking about, because the same thing happened to me in my early 30s. I'm waiting with bated breath, mate. Where to from there?
Well, I mean, it turned out that, I was pretty focused as a portfolio manager at that time, and we did quite well in the early years of my hedge fund. We won the Best Emerging Manager at the Australian Hedge Fund Awards, and that was after sort of 3 years of performance history, and we started to get some traction in terms of capital raising, and that's when I did a deal with BlueSky, where they bought my hedge fund business off me at the time, which and I went in as partners with them, so we basically went 50-50 on the equity at that point.
Yeah.
So I had a sort of foundation. I was back inside it was a small corporate at the time. It wasn't a large business, but there was something, and there was upside, and so we just worked to build out the hedge fund business. That had its challenges, and many of your listeners would know that where the BlueSky sort of story ended, it ended in tears in the end. I mean, I had sold my equity into the roll-up for when we listed, so I had equity in BlueSky, the top company, which was listed on the ASX, and then I exited the hedge fund business in 2015, so I kind of got out well ahead of anything turning to custard, and that was better luck than management. I had no visibility around any of that. Actually, the main reason that I left was simply because I was doing lots of travel at the time, to the US a few times a year, and I was in Adelaide 2 days a week, and I had two boys that were sort of 13 and 15, and I was like, I'm just not going to see them, and I've literally got this tiny window of next 3 years is it, and then the boys are, I'm irrelevant. So, or at least my level of influence is irrelevant. So, that was, the main driver at the time for me departing. And as I say, it just kind of, it's terrible the way the thing ended up. And it's I lost a bunch of money buying the stock on the way down because I just couldn't imagine that the thing was going to go to zero. But that's actually where it ended up.
Again, a very humbling experience, but fate was looking after you in relation to your priority for the family.
Like I say, it's sort of sometimes it's better to be lucky than smart, and that was kind of one of those experiences. But I would say that notion of dealing yourself into the game obviously was something that kind of worked out. It worked out reasonably well personally in the end, but that's I guess it's an intrinsic underlying principle that I would take to pretty much my business dealings and investment dealings today. It's that same idea, deal yourself in, maintain a bit of upside in whatever it is that you're doing.
Yeah. You sort of mentioned that the hedge fund won some awards early and then took a different direction. What were the learnings from that? Because again, once you've started getting kudos for performance, often putting probably words in your mouth, but often you take the foot off the accelerator, and the level of scrutiny that you put into things because you've already proven yourself, and then the market takes a different direction, and suddenly you're caught with your pants down. But can you talk us through some of that, and again, what you were learning and what you were doing differently as that progressed?
Oh, that's a great, insightful question, Bushy, because, my first sort of 5 or 6 years of that strategy were, pretty world-class in terms of investment performance. And then the last 2 or 3 years, it basically turned to custard. We had what's called a peak to trough drawdown limit embedded in the constitution of the trust for the hedge fund, which basically said if the fund went from 25% peak to trough, so in the way the equity curve kind of, so in other words, it's not quite losing 25%, but it's like from peak equity down 25%, then you have to close the fund and hand remaining monies back to the investors, which is precisely what happened.
Yeah.
It turned out that it was great that we had that clause embedded in the constitution, because my strategy, which was actually at the time, it was basically looking for behavioural anomalies. So you would have heard this the idea as a macro investor or a macro trader. So I was looking for each of these different markets that I was investing in, being currencies, commodities, equities, and interest rates. You have a valuation model for each of them effectively.
Yeah.
And then when the market price moves, certain distance from that economic fundamental, then you want to wait for the market to turn.
Yeah.
So that you then get on it as an early to middle stage trend sort of experience. So you want to trade in line with fundamentals, not against fundamentals, but you got to wait for the price to shift.
Yes.
In line with fundamentals.
Yeah.
And that worked beautifully. I mean, not just in the first 5 or 6 years of my hedge fund, but that worked for me very well since sort of 1997. Through to 2012 or thereabouts.
Yeah.
So 15 years of, very good trading returns, basically running that strategy. And then, what shifted was, obviously central bank activity. They started printing money and buying assets, and I had a context that actually no one's bigger than the market. So ultimately the market fundamentals will win. Central banks will lose, and I was very inflexible in the face of shifting evidence.
Yeah.
And so that's why the fund went. I lost money, and thank goodness it did, because my own personal trading subsequent to the hedge fund closing for a period of years was pretty ordinary. I wasn't learning. I was, the old definition of insanity. I was doing the same thing and getting smacked in the head repeatedly. And I wasn't willing to be flexible. I was actually, no, the market will shift. The market will shift as opposed to me shifting. So, what have I learnt from that? I would say firstly is that, trading's not about being right. It's about making money.
Yeah.
And, if you need flexibility is probably the greatest, the most important thing as a trader, not necessarily as an investor, but certainly as a trader, you need to be flexible in the face of changing evidence.
Yeah, it's a really good point. And with the level of hyper change and unpredictable nature of what we're now in, given the accelerators through technology and the herd mentality that goes with it, that flexibility is pretty paramount, I would have thought, but and we'll delve into that in a little bit more later on. So, okay, and I'm guessing this is around the time that you, I spoke about Grand Designs and your beautiful home there in the Tamborine Mountains. Was it around that time that sort of came together?
Yeah, so I say I lost money trading, which was true. For a period there, but at the same time, we were long Bitcoin basically. So I have a friend, mentor, and his business partner in a trading related business, and he at the time, God bless him, sent me 0.1 of a Bitcoin. So he got me on the phone and he said, Dave, just get in front of your computer, go to this address, like he literally held my hand, walked me through it, and then said, watch this turn up, boom, and 0.1 of a Bitcoin turned up in my wallet. And I was like, okay, well, that's good. What's that, So I watched it for a period of months as a skeptical macro guy and then went, well, actually, okay, so if I'm going to buy it, well, this is probably the level because the way it was performing in terms of price and on a price chart, it was like all this bad news was getting thrown at it, but it wasn't going down. And that's generally it tells you that the demand for an asset is particularly strong if it's not going down despite all the news and, psychology being thrown at it. So I kind of, rounded it up. I went, okay, well, I better go from 0.1 to 1 and then I rounded it up again, and then I rounded it up again and, I ended up with a reasonable holding. And this wasn't at $5 or anything. I ended up buying it in 2015, which was my average price was about 270 US or 350 Aussie or something like that.
Yep.
And and so I put a bit of cash into it. I wasn't I wasn't one of these guys who spent $5,000 and went woohoo. Bought it at 5 cents or $5 or something. But so we ended up. One of the things I do pretty well is actually ride a trend. So it went up and kept going up over the coming years, and you got to a point where it was too big a position for our existing portfolio, so I just sort of talked to my chairman of the investment committee, and we decided to move it out of crypto and into a real asset. So that's what we did. We bought a block of land on Tamborine after having over a period of months selling down our Bitcoin holdings, and bought a beautiful block of land, and then it turned out that, well, I was very happy. I put a little shipping container on there to stay in, but my wife was, reasonably keen on slightly better digs. So we ended up. A good mate of mine is a fancy architect, and so he was the one that was approached by Grand Designs, and ironically, my wife thought it would be a great idea to be on Grand Designs, and I didn't particularly want a part of it. But anyway,
why is that, mate? Can I ask why were you a little bit hesitant?
Well, I mean, I just, I'm probably a little bit oversensitive, really. I don't really like to. I mean, yes, we had some success, and I didn't really like the idea of flaunting that publicly, if you like.
Yeah.
So that was probably the biggest thing. But, when she said to me, look, it's a moment in our lives that we're going to get documented as posterity. Like, why wouldn't we do that?
Yeah, exactly.
And I went, okay. And I'm actually very, very grateful for the experience, the whole thing, because I worked as a labourer on site for 18 months.
Love it.
And just what a gift. I mean, but prior to that experience, I couldn't literally. I mean, I was, I'd ring up an electrician to change a light bulb. So I'm not saying I'm particularly handy now, Bushy, but I'm.
I've got this little extension I've got in mind, mate. Can you drop over in the weekend? No, because apart from my wife, no one knows this, but my dream job, and it's still on my vision board, David, is to become the host of Grand Designs, because I was an architect for 20 years, so that you can take the boy out of architecture, but not architecture out of the boy. Wow. And I just love that show. There's some great stuff that comes through it, and yours is a great example. I was very similar at a young age. My first job when I left uni as an architect was to design and build my parents' home, and they were dumb enough to let me loose on it. And I did the same thing. I designed it, but I strapped on the nail bag and the overalls and worked with the subbies and said, righto, well, this is what I want it to look like, but you teach me how. And It's the best learning experience I could have had as a young architect about to get loose on the world, because like most things, when you leave uni, you know enough to be dangerous. Yeah. And great experience, mate. So that would have been again a fun time, a challenging time, and buildings never go to plan. So exposed warts and all, and the show's very good at picking up on the warts.
Yeah, sure.
But it would have been a good time with the family too, I'm sure, at a fairly foundational time for your kids too, I'd imagine.
Yeah, they actually were so busy. It was a sort of last years of school, and the eldest was he's actually just started architecture. So he had at the time just started architecture. So they were very busy, and it was hard to get them too engaged in the whole build process. It wasn't too hard to get my eldest doing architecture, but nonetheless, the time constraints that the boys had were pretty meaningful. But they obviously they love the place now, and who wouldn't as a 21 and 19 and 21-year-old? You'd enjoy getting friends up there now and again.
Beautiful, yeah.
On a fairly tight leash, of course, Bushy.
Of course, mate.
Yeah.
You know what they can do because you did it at the same age, I'm guessing.
No, not me. I mean, my wife perhaps, but.
That's your kids often bring out the worst in you at the same age, I reckon. David.
Yeah, well, that's about right. Yeah.
So, all right. So the completed the beautiful home, took the 18 months out. Where did that lead you in your thinking, and what was the next step from there?
Well, I mean that sort of got us to a place where I was okay. Well, I've had some good gardening leave from my sort of professional life. Quite literally, and I mean, I was also reasonably active as an investor in some other businesses. So, there was a trading platform business that I was an investor in that, I was doing performance consulting for them, helping them with, sort of talent identification with traders. And that's sort of something that I've done, for some years professionally.
Yeah.
So, it was a fairly logical step for me to actually go, okay, well, I enjoy doing this, and I enjoy, helping traders and investors avoid some of the mistakes that I've made. So, and at the same time, I've spent a fair bit of time with my business partner John and his and Stuart, who's a programmer, and by Lee, our other programmer, actually building some trading strategies that capture our experience and insight around what works in markets, but sort of strips out, particularly my capacity for bringing bias to the table. So, we've been doing that. That's sort of over the last 18 months, is building our own strategies, which are much more consistent and durable. than some of the more discretionary macro stuff that I'd been doing in the past. So that's been a really fun project. And at the same time, just working with other traders to help them actually hone their process. So, what I find in that, it's out of courtesy of my own misgivings, is that a lot of what you think are factors that actually positively impact performance, unless you test and measure them, you don't really know.
Yeah.
And that's the sort of thing that I'm doing with Bailey, our programmer, with other traders to actually help them so we do a sort of diagnostic, if you like, to look at their data, their trade data, and actually determine whether or not there are particular areas that straight up can give insight and value to help traders' processes become more repeatable, more robust.
Yeah, something that I'd be, and this might be the right time to dig into this, but, I was a very active trader myself many years ago. Not so in recent times. I'm more a holder and a long-term investor these days. It's more interested in cash flow than growth. But, and I did a lot of back testing, obviously, of systems before I actually went live on the trades. And I'm not that close to it right now, but I'd love your thoughts on the sort of relevance of back testing, given some of the dynamics that we're seeing in the marketplace that are changing the way the markets potentially are behaving. What's your view of that, and particularly in the context of what you're talking about there with your partners in looking at the sort of consistent data that's meaningful to trading performance? What are your thoughts around that?
Yeah, I think where a lot of traders, private traders that are coming to the market and looking to try to make a business out of their trading process, get stuck in that statistical backtest trap where they'll read about stuff or whatever, and they'll test, this indicator against that, and then they'll optimize. So they'll find something that turns up pretty well in a back test, and then when they start trading, it starts looking very different in reality to what their back test sort of alluded that it should look like. And I think the main reason for that is, at least in my experience, is that there's two types of returns you can generate if you're doing stuff well. There's two types of returns. This is sort of in the hedge fund / trader world, where there's what's called alternative beta, and then there's alpha. And without getting too complicated, like alternative beta is basically certain factors that actually exist and have been tested rigorously. They've been around for since Adam was a boy, and there's all this academic literature on them. And a simple example would be value or momentum.
Yeah.
So value, hasn't worked in the last few years very well just because of central bank activity, but momentum has worked reasonably well, right? But there's a statistical evidence for momentum, and it's a reflection of psychology, right? So, when you look at the price chart, when people are wanting to get involved in a stock, it moves a certain way, not exactly consistently, but it moves a certain way, and it just reflects the impulse to own a stock at a collective level, not just stocks, but in whatever market you're talking to. So inside the alternative beta world or beta world, you can build strategies based on that anomaly.
Yeah.
And they'll generate people get tricked up because they try to sort of reinvent the laws of investment physics around these kinds of opportunities, right? So trend following is a simple example. Not unlevered, but like at reasonable leverage, it will generate something like 25% per annum, and it'll have something like a 20% per annum maximum drawdown. So what that means, in other words, it doesn't go up in a straight line. There's lots of wobbles along the way, but over time, it'll make you good returns if you execute it well.
Yeah, and there's the key. Yeah.
And so that's one way that I can help traders that are new to the market is to go, okay, let's build, or help you to build, I should say, an alternative beta strategy based on whether it be momentum or mean reversion or value is the other one. And this is the types of returns. This is the way the return distribution turns up. This is what you can likely expect in terms of your win rate and your average win to average loss. So some of these very simple trade statistics that you can bring to the table to help people to inform them around expectations and what a well executed strategy should look like.
Yes.
Yeah, and then the second one is alpha, right? So this notion of, okay, I'm doing something different to what most of the people in the market are currently doing. So I've identified an anomaly.
Yeah.
And I'm just going to consistently harvest volatility based on that anomaly every day, and I'm going to do nothing else. And it might be around a particular entry. They've noticed when something happens with an announcement, or they've noticed that at a certain time of day a particular stock does something, and this anomaly might not last forever. It might only last for 6 or 12 months, but they're very clear on what it is, and they don't get distracted by doing other stuff.
Yeah.
And that's rarer, and it usually requires more time in the market to be able to identify those little anomalies that you can then build a strategy around that can create alpha.
Yes. Yeah, understand. Yeah, and it's a form of arbitrage in a sense, because you're looking for an anomaly, and you've got to be that well.
Yeah, you've got to be Johnny on the spot. You've got to have good process and systems to be able to capture it.
Yeah.
And to actually really understand what that anomaly, like at what part of your execution process is the anomaly around entry, is the anomaly around the trend, is the anomaly around your exit, is your where is the value that you're bringing to the table in terms of how that translates into alpha.
Yeah.
And it gets a little, that's a little bit complex. That's not for your average Joe generally, but a lot of people think straight up when they enter the markets that they've got some insight that the market doesn't have. And that's pretty rare.
Very rare.
Yeah.
And dangerous, almost dangerous at times, because it's, we're starting to get real. I mean, the underlying thing here is, and you mentioned it well before, is the psychology. And would love to expand a bit on that, because I think it's an underestimated, for the average Joe, not someone with your level of sophistication, but for the average Joe, it's not something there's not a lot of mirror time spent understanding who they are and how that's impacting on their investing or trading performance. Can I get you to talk a little bit about that?
Yeah, sure. So, Bushy, I think, like trading psychology, I spent a lot of time on this because I was a discretionary trader, which basically means that I'm making buy to sell decisions based on a loose set of rules, but not a deterministic kind of set of rules, so like a systematic trader. So when you're a discretionary trader, like suddenly these, your decision inputs are affected by your biases, they're affected by, a whole range of stuff that you bring to the table, and to the point where sometimes you can end up trading yourself. You're not even trading the market, which, by and large, it's a pretty hard way to make a living, actually. It can be interesting as a means of personal development and self-discovery, but it's a pretty expensive one, actually.
Yep.
Yeah, so the way I tend to see trading psychology these days is, firstly, you've got to have a base level of self-awareness and capacity to leave your ego at the door. I've written a curriculum I call it self-care, which is basically self-compassion, self-awareness, self-regulation, self-expression, and what that enables. It's a series of it's a progressive meditation experience that helps people to get to a place where they can kind of press an emotional reset button on demand, if you like, so that they're not bringing all their baggage with them, their past experiences and their past hurts and failures and whatever, to their decision making. It's a way to kind of look at uncertainty and not be overwhelmed by the anxiety associated with uncertainty, but actually to be free and curious when faced with uncertainty.
It sounds like a pretty powerful, because you're habit breaking, you're getting into the realms of the subconscious and smashing through some of that stuff with that sort of work.
Yeah, not fairly gently though, Bushy. Like I'm not, it's not psychotherapy or anything, but it's literally, basically what I've over 25 years. So my first job as a trader at BT, I walked into a dealing room and saw guys that have been trading for 15 years, just completely impacted by their emotions from the day before. So, made money, they'd come in the next day cocky, they'd lose money. They'd come in the next day and they'd miss opportunity because they were sheepish. It's just a classic, making decisions based on past emotional experience. And I just looked at that as a 22-year-old and went, oh God, if I'm going to do this for a career, I need to be able to approach this in a manner that's I'm not at the whim of my emotions. Yeah. So I went down a path of a psychological, emotional, spiritual kind of discovery where I did a whole range of stuff so that I could literally turn up to work and press a button where I was not impacted. Because I never wanted to be a robot. I never wanted to be a systematic trader per se, where I didn't, emotion had no impact, because I'm an emotional being. I'm more about reading people than I am about reading the market. So I didn't want to turn that off.
Yeah.
Anyway, so over the years, I developed a process for myself which enables me to do that. I can press a button and clear my crap. And I find it helpful. It's not just helpful for decision making around trading. It's actually helpful in life.
Yeah. I can see that being a massive thing, mate. Because so many of our decisions generally are clouded with emotion. So being able to clear some of the backlog and treat a situation as new is a pretty rare skill, I would have thought, David.
Yeah, look, I find it helpful, and the people that do the program find it helpful. It's because it's quite a gentle way. Because basically, all I did was reverse engineer. I went, okay, well, this is the output. How do you need to train your brain to be able to get to a place where you can press this button, free of fear or anxiety or all that stuff. So that's all I did, and that's where I went, okay, well, actually, you need to firstly start with self-compassion. As it might sound a little airy-fairy or soft, but it's actually no. You need to be able to have tools in the kit to be able to treat yourself with compassion before you try to really build on self-awareness. Because self-awareness, there's in all the academic literature, there's this paradox of self-awareness where it can lead to more reflection. Not reflection. I should say rumination versus reflection. So it can become where you can sort of pile in on yourself when you're reflecting. You become more ruminative if you don't have tools to manage that. So you need. It's basically scaffolding. So it's mental scaffolding as self-compassion tools before you go into self-awareness, and then we do a whole range of meditation exercises around self-awareness, and not just meditation. There's written exercises and thought and process around that, and then we go into self-regulation, which is sort of how do you, given your new awareness or heightened sense of self-awareness, how do I turn that into action in life, in the world, and what are some tools to help me better regulate my reactions to emotional discombobulation, and then from there there's that notion of self-expression, which is a new means of expression, which is the actual leap, if you like, where you can press this reset button whenever your stuff comes up. But that was a slight digression, Bushy. Like that's
not really, because as a life skill, I think every listener that's listening to this episode, including myself, could benefit from what you've just described. Because decision making in any format, if you can become self-aware, that leads to self-regulation, that then gives you the self-expression and the confidence to make good, clear, rational decisions that take on board the emotional content, but in an objective sort of a way, is I think a fundamental skill that would be useful to success in any endeavour.
Well, yes, and you're preaching to the converted there. I find it a very valuable tool for me personally, and as I say, the people that have done the program, find it pretty helpful too. So but I say it in the context of traders and investors. What I've experienced with people coming to me and saying, "Look, I'm tripping over myself all the time. I'm making poor decisions, and then greed and fear gets in the way, and uncertainty, and blah blah blah." So all these emotional issues getting in the road of their decision making. I say, well, yes, there's that base level of do this program, and that'll definitely help you to kind of find a base rate, emotional base rate for you to be able to be more objective and to learn more about how you respond in certain circumstances, how it is that your past is actually impacting present decisions and emotional experiences and all that. That's a base, like that's important. But actually, if you don't have good process as a trader and investor, and it's, we're not talking just traders here, Bushy, as you know, in investing generally, if you don't have good process, that leads to poor mindset.
Yeah.
It leads to all these emotional pushes and pulls that get in the way, and then you sort of think it's just the emotion that's causing you all the grief. Actually, no, I would say 8 times out of 10, it's poor process that leads to poor emotional outcome. I think that the grounding in the having tools at your disposal from an emotional regulation perspective is massively important, but it's like 20% of the deal.
Yeah.
You've really got to have a great understanding of your own process. What are you good at? What's the edge that you're bringing? What anomaly are you trying to exploit? And have rigor around that and do the work around that, and that's going to really make a big difference to your psychology.
Yeah, beautifully said, mate. And I'm taking it that a big focus of your coaching regime revolves around this sort of causal link between defining a process that suits the individual, so it's quite customised to take on board who they are, what they are, how they think, and how they act, and then the linkage with good process that then supports that. Am I reading that right, or?
Yeah, I think. I don't typically work with people going, "Oh, I want to be a trader," and then they come in like that's sort of trader education.
Yeah.
And no, I'll work with someone that's been in the markets for 6 or 12 months, but are serious about it. Have got a balance that's. They're not just throwing $5,000 at the markets and, are basically going 32 black. But as a general rule, no, there's a base level of experience and understanding of how markets operate, and base level of understanding of what they're bringing to the table. That's at a minimum. Obviously, I work with institutional portfolio managers and traders as well. So,
yeah.
But I'm not in the game of teaching people how to set up a trading account. And
no.
I would say to that though, like in recent times, there has been a bit of a frenzy around people kind of confusing bull market with genius. And not to say I'm not predicting a top in a market. I've sort of given up prognosticating about markets in that context because I have been wrong for long enough. So I'm not I'm not the first one to say a top's in. But in terms of behaviourally, yeah, the people that are new to markets, if I would say one thing, it's like sort one thing out before you start. Like it'll take you a while to find an edge. It'll take you a while to find something that you can generate alpha on. but you can have good risk management strategies, which will save you a lot of money.
Yeah.
So focus on risk if you're engaging in markets for the first time. And, ultimately it's less about making money. It's probably more about not losing it.
Yeah, beautifully said. Beautifully said. That's exactly right. And I get very, what's the word, apprehensive when, and let's take the example as we're speaking. The crypto craze is right back in flavour, and every coffee shop owner, taxi driver is talking about racing in and getting their hands on some Bitcoin or one of the other cryptos. I get very nervous when I'm hearing that discussion, and when that's being facilitated through technology and no fee trading platforms and where there seems to be a complete disconnect between true value and the price of a particular entity, whether that be a share, a stock, a metal or a crypto. What are your thoughts around that? Because I'm seeing people pile in. I've had people ring me saying, "I'm going to sell my investment property and pile my money into crypto," and that's about as much thought's put into it, by the way.
Sure.
What's your feeling and reading, and what would your thoughts be to the listeners around that, and what should and shouldn't they do?
Well, first thing I'd say is back in 1998, no, it wouldn't have been. It would have been 2001 probably.
Yeah.
I was, I owned a home up in Red Hill in Brisbane, but I was working in Sydney for an investment bank, ABN AMRO at the time, and my boss, I was like, September 11 had happened, and we're in the middle of the tech wreck, so the stock market was falling precipitously in the US, and I'm like, mate, I'm so bearish. I'm bearish property. I'm bearish everything. And he goes, well, mate, why are you still long your house? And I went, well, he goes, well, mate, put your money where your mouth is. If you're bearish, sell your house. And I went, oh, okay, and sold my house. And well, firstly, 6 months later, the same house, I sold it for like $450,000. It was like just 805 square metre block in Red Hill. What drugs was I on? But anyway, I sold it for that, and then 10 months later, it resold after a paint job for $850,000. And what did I do with the proceeds? I actually went and bought gold at $250 an ounce. I was a superstar as a trader. I bought gold at $250 an ounce, and then 2 or 3 years later, when my business down the Gold Coast went tits up, I sold my gold at like $450 an ounce to fund my business, and then got caught on a tax bill. So you asked me about selling your investment property to buy crypto. Well, I don't know anyone's circumstances personally, but in my own experience, it's like I'm sort of making sure that I don't get into a position where I have to sell property.
Yeah.
Because it generates an income. I mean, I'm not a perennial bull on property. I'm not a perennial bull on any asset class, but I think that there's something to be said for not necessarily falling for the latest shiny thing and getting out of something that you understand and that you're familiar with and generates you a yield and all that. That doesn't answer the question directly around crypto, but it kind of that's how I feel about it. And crypto, well, I'm not. I don't understand. I mean, I've been long Bitcoin and I've traded a whole bunch of these. Through 2017, I was in and out of a whole range of those different tokens, and so I've got a reasonable handle on what works and what it's meant to do. And
yeah.
I'm not calling myself an expert, but I don't see it as anything different. I mean, yes, there's some technology that underpins it that is that will transform things.
Of course.
For people that are digitally native and then actually able to transfer value across the internet, whether it's inside a gaming platform or payments, through like remittances and things like. There's a bunch of use cases for crypto that are going to make a big difference in the world. So I'm not bearish. I'm not bearish crypto at all.
Yeah.
But how do you value Bitcoin? And I would say, how do you value Tesla? Or how do you value, a lot of financial assets in the current environment? Valuation is a little bit finger in the mouth, finger in the air.
Well, it's almost a nonsense because there's no correlation in the current exercise. And this is where I think your trading approach. You made a comment earlier on that, and I'll paraphrase it, but my read of what you said is you're very good at letting your profits run, and which is really good advice because again, a lot of investors I see they mentally put a cap on the profit they're going to take, and they'll take that profit and miss out on a massive upside that they could have taken advantage of, rather than, as you mentioned, let it cap out and it start to come back, and then take your profit, and you've still got a sizable sum in your skyrocket. I guess that values approach makes no sense, and you can't apply a values approach to assets like crypto at the moment, where yes, it has a use case, but that use case is a while off. So what we're trading on is people's psychology. It's the old bigger fool mentality that you often hear thrown around. I could in some ways apply to the current performance of crypto and anything else that the Reddit come Wall Street herd want to throw at a nonsense meme stock, as they're starting to call them now. What's your read around that? Because there is some pretty interesting activity happening as a consequence of really channeling a herd mentality and just almost artificially driving up the value of something. What's your read around what that means and where that's heading?
I'm not certain by any stretch, Bushy, but I kind of look at the current environment and I think, well, let's face it, governments and central banks have turned the world into a casino.
Yeah.
Like that's what's happened, right? Yeah. So, more money's been printed in the last 10 years than, the world's ever seen. There's been no consumer price inflation, but there's been lots of asset price inflation, which doesn't get counted in the CPI. So as far as we're concerned, it's like, no harm done. Everyone's getting richer if provided you own assets. There's a bit of a revolt by the retail, against Wall Street in that context. So that's one of the narratives that are running around the GameStop and, those types of moves by the, Wall Street Bets Reddit group. And it's interesting, like I look at that and think, well, who's copping the bad rap for that at the minute? It's the short sellers.
Yeah.
Which I find a little bit, short sellers are such an easy target. Like everyone hates a short seller, and I go, well, actually, the day that there's no short sellers, which, let's face it, that's probably where we are, or somewhere close to it. There is a scary day for markets because these guys hold people to account.
Yeah.
They've got to be archers more than sword fighters. Like they've really got to have a laser focus on what it is that they're participating in. They've got to manage risk to the the nth degree.
Yeah.
They identify frauds. And there are a portion of short sellers out there that actually get short an overvalued, or what they deem as an overvalued stock, and then try to do some sort of short selling report and get everyone to pile in. As the opposite or as an exact reflection, a mirrored reflection of what the Wall Street Bets crowd have done on the upside.
Yes, exactly.
But I think, blaming short sellers for what's going on is it's a red herring.
Yeah,
it's a red herring.
Yep.
Anyway, what does it mean for retail punters moving forward? Well, look, it's I guess people are playing the casino while it's working, but I think that there's probably systemic risk inside this environment that most people are unfamiliar with even contemplating. Credit risk inside individual brokers. Like, I mean, I don't want to be a Chicken Little here. Like, I'm not. I'm participating. I have money with brokers. I'm playing the game. But I think it's important to understand that that this is a very anomalous period. It's not something we have ever seen. And if you think that's going to persist forever, uninterrupted, well, I think that's probably a naive assumption.
Yeah.
So, just sort of keep it tight, and as Warren Buffett would say, keep if you've got everything in one basket, keep your eye on that basket. Don't get lazy.
Yeah, and you made a very good comment earlier on when we were talking about the decision that you made to get out of crypto and put it into a real asset. And what I'm reading between the lines there is you're looking at the risk profile of your portfolio and saying, well, I'm too heavy in this. That's dangerous territory. Let's realise some of that and then rebalance it so that you're not putting all your eggs in one basket. Can I get you to expand a little bit on that? Because I think it's a really important thing that a lot of traders don't get their head around. Is that level of risk exposure and not rebalancing their portfolio?
Yeah, look, I mean, that was a very unusual sort of position to be in, where over a 2 or 3 year period, a position sort of went 20 times where we bought it. So, it did obviously have a big impact. When we bought crypto, I wanted to make sure that, when I decided to increase my exposure into Bitcoin specifically, I was like, okay, well, in terms of managing risk, I need to manage risk on the downside, but I've also got to manage risk on the upside. And that meaning I've got to have a big enough position that if it goes to zero, it's not going to ruin our lives, and I've got to have a big enough position such that if it does go 20x, it's going to move the needle sufficiently for me to feel like I've, actually had enough of a go of it. So, we actually got that, we calibrated that pretty well. We had about 5% of our portfolio in it. I was sort of thinking, on a single stock basis, I might have 1% to 2% of an individual stock in a portfolio, and I thought, well, I'm not investing across the crypto spectrum. This is in 2015.
Yeah.
So, basically call it two or three stocks I'm putting in one exposure, which was it was a pretty big bet at the time because, there was a fair bit of uncertainty around crypto then.
Yes.
But anyway, yeah, when it got to, it sort of being north of 50% of our portfolio, I was like, okay, well, I have to lighten up here. And for a couple of reasons. One is at that time there weren't these over-the-counter trading desks where you could get set on reasonable amounts in a day without taking significant credit risk. So I was having to leak my exposure out at 10 grand a day basically for a period of time.
Yeah.
Because there wasn't liquidity available in the existing exchanges in Australia, and then the off-ramps to get it back into Australian dollars. So,
yeah, of course.
I had to take non-market related, non-price related decisions around risk.
Yeah.
Which helped me to kind of reduce my exposure without thinking too hard about it. Now, look, if I hadn't have sold any Bitcoin, it'd be worth a lot more today than what it was when we sold it. But you know what? I don't actually experience any regret around that. It's like, well, I'm getting a lot of utility out of Tambourine, and
I was going to say there's a lifestyle benefit that you can't put a value on that's worked beautifully for yourself and your family.
And I wouldn't be talking about crypto today if we hadn't have sold it either, because guess what? I don't want anyone to hack my account.
That's a very good comment. But I think the thinking process you went through then, I think, is very apt today, because I keep hearing about people piling in and following the herd, and they're not even thinking about percentages of portfolios a lot of the time. Or reflecting on them in terms of, okay, suddenly this is 50% of my portfolio. I perhaps need to think very carefully about this. I don't think that's even part of the psyche. So if you were to, talking to listeners who are, contemplating They've put themselves in a position where they can invest, and they're going to be putting their hard-earned into something without giving any financial advice, because that's not what we do here.
Yeah, sure.
What would your suggestions be to them on the pathway and the things that they need to think about and contemplate in that process?
Well, trading and investing are bushy. So do you want me to talk trading in the first instance, or just we're talking investing?
I think we're talking
generally?
investing. I don't think, and I'm going to make a massive assumption here, but a lot of our listeners are career-minded professionals, and a trading environment is just not going to work for them unless they're getting someone else to manage it for them, because they will not have the time to be able to do that justice. So we're talking a more medium to longer term investment horizon. Right. So I'd love your thoughts around that.
Well, I mean, first thing I'd say around investing is, and obviously it depends on the life cycle of the person in question, but I can talk to the advice I give my kids around it, and they're 19 and 21, and so they're still at uni, and so that's a bit early. Yeah. But I know a lot of your listeners will be older than that, but I say to them, look, at this moment in time, because they're asking me about markets and which should I invest in and da-da-da, and I'm like, well, actually what I'd be investing in right now is what are you good at and where do you have a competitive edge inside what you're good at. So they're both musicians. One of them's a guitar teacher and he's the lead singer of a band, and the other's a music producer. And so it's like, okay, well, how can you invest in your business to generate leverage? Because at your age, like you can leverage your personal exertion income far more effectively than you will by buying, Cardano or Bitcoin or some latest stock tip when you've got no process or insight.
Yep.
So invest in yourself and invest in what you're good at, and see if there's a way that you can generate an income off that. That's where I start, and then if you have investable assets, well, you got to look at where you are in life. I think you talk property. Well, what are your property needs? Like, that's a fairly simple economic question, really, isn't it? And am I going to rent? Am I going to buy? What's better for me? And most people, as you know, will invest in property as a general rule before they'll invest in meaningfully in stocks or, other things. There's a bit of a shift around that at the minute because, people are participating in pretty exciting markets. But, as we've talked about, that has its risks.
Again, my question is not a good question because it's way too generalised to be able for you to sort of offer anything that's going to be truly meaningful in that regard. But if you are someone in your late 30s to mid 40s, for example, yes, you've got a home and you've still got a bit of a home loan and you've got a couple of $100,000 worth of equity and some cash in an offset account. And you're looking to invest beyond your business and beyond those things, what would your thoughts to them be?
Well, I suppose I would just look at the where we are in the interest rate cycle, really. That's probably the most important thing at the minute is and go, okay, well, how would your current setup handle, rates going up to 5%? I'm not saying that they will. I've got no sense of time frame around any of that. But, there's this notion of in economics of second and third round consequences, and which, it's such an old school way of looking at the world. But, to think that the current environment will go on forever unimpeded is an unrealistic assumption. So how do you manage the biggest, like those consequential risks that can take you out of the game? And, you'd have to think rates or inflation or something like that is one of those risks that sit out there. How you price those risks, like what the probability you assign to them, et cetera. That's a, personal thing. But that's something I would be asking. It's like, okay, should I be locking my rates in here? I don't know what the curve's doing. Bushy, you're across all of that from a mortgage perspective.
Yeah.
But, is there a way I can – and, that's something that we're doing personally is building systems to capture early to middle stage trend for commodities markets and other inflation favourable asset classes or favourable assets that, when we do back into a world where inflation turns up, how do we actually capitalise on that? Because most financial assets today, and to some extent property, Bushy, not completely, like property is very segmented, as I know you will talk to.
Absolutely, yeah.
But is some parts of the property market has become more financialised because of the underlying low interest rate environment and the debt that underpins it. So,
dead right. Yep, dead right. Yeah, very interesting, mate.
Clear as mud, Bushy. That one?
Yeah, well, it's probably they're topics that we could spend an hour talking on their own, and I think we might actually do that at a later point if you're open to it, Dave, because I think you've got a depth of knowledge and in insight and an approach and a framework that I think while we've sort of danced across it. Is going to be fundamental to success in any level. So I might get you to close on that point before we jump into the ambush round, because if there are sort of fundamental lessons and approaches that you think people need to take, and let's bring it back into the investment space, which is your core focus ultimately, or trading focus, whichever you're comfortable on some of the principles and the processes that the listeners should be aware of?
Well, I would just say understand what it is that you're good at. Like, in anything that you do, you need to have some form of edge in a highly competitive world, right?
Yeah.
So understand what that edge is, or understand enough about your, even if it's, for example, it's a passive strategy in investing in property, Bushy, like, okay, I've got a passive investment strategy where I've got one or two investment portfolios. How am I enhancing my yield? How am I decreasing my vacancy rates? Like, how is my leverage? Like, am I managing my my debt? But I'm also, how much wiggle room have I got for contingency? Like, actually really understanding what are the levers to your investment performance, and really, focusing and honing and tightening and, just becoming really focused and, like I say, know what you're good at, know what your edge is, know what anomaly that you're looking at and that you're trying to exploit. Because otherwise you just end up in this world where, hope is your greatest investment ally or asset.
That's a very scary concept, mate, if we're getting down to hope. Awesome, mate. We might jump into the ambush round then if we can, and they're just the 5 very simple questions that the listeners always want to sort of glean your words of wisdom on. So sort of kicking straight into those, what's your favourite quote and why?
Well, Bushy, there's so many good quotes out there, but I'm going to quote my father.
Right.
And this, sort of plays into, but it talks to that notion of self-compassion, which I'm pretty big on inside his self-care process. But, he would say to me, Davey, don't beat yourself up, mate. There's no shortage of people in the world that'll do that for you. And that quote has got me out of trouble so many times when I'm in this sort of cycle of self-loathing, after making a poor decision or what have you. So that's a pretty good quote, I reckon.
That is a cracker, mate.
Peter Hobart,
What was your father's name?
Peter
Hobart. There we go, mate. Well, that's awesome, because I reckon in 160-odd episodes you're the first to give us an original, unique quote, mate. So that will go down in the annals, mate. Switching across the literary field for a tick, what's the top book that you'd recommend people read and why?
Okay, so I reckon a few. One, if it's economics in One Lesson by Henry Hazlitt, written in 1946, I think. And you'll read that and go, what the hell? It's got no relevance to today's economics. But basically the idea behind that book, if I could summarize it in a nutshell, is that every economic policy decision has a second and third round consequence. And if you don't consider that, then you're basically, there'll be consequence that's what you would deem as unexpected, but a lot of it is actually visible if you actually think about it.
Yes, and there's the key. People don't look further than the end of their nose.
Yeah, it's a short read. It's pretty dry, but this guy was a journalist. He wasn't an economist. It's a ripper. Economics in One Lesson by Henry Hazlitt. And yeah, so that would be an economics one. If you want fiction, I would say anything written by Jeff Wheeler, JEFFHEELER, and you'll only find him on Kindle. And if you don't like fantasy, ignore it. Jeff, he puts me to sleep, as in I always love to go to sleep with a he's not one of these fantasy writers that are, you don't know who the good and the bad guy is, like a Game of Thrones where it's like everyone's got a bit of dark.
Yep.
Jeff's like, no, the good guy, he's got loyalty, he's got courage, he's brave, or she is. It's actually a lot of female, protagonists in these things. But I just go to sleep feeling like Frodo.
I've got the same habit, mate. I've got a Kindle, and that is my. And when we're saying put to sleep, it's not that they're not boring us. It just takes us out of our heads and puts us in a happy space where we're not thinking about the issues of the day or the problems of tomorrow, and allows us to go off to sleep very happily, thinking about someone else's adventure. Yeah, love that. This is a bit left field, this one, but it's just such a common theme amongst hardworking Aussies that believe they pay too much tax. What's the top legal thing that you've done to minimise the tax that you pay?
The truth is, Bushy, I have been rubbish at managing tax. And I could give you, I think I already described an example of where I paid tax by selling a property and then buying gold and then selling the gold and paying tax on that when I didn't have the cash to pay the tax bill. So I would say my one piece of advice based on my hard-earned experience is actually when you can't afford to pay for tax advice before you embark on an endeavour, find the money and pay for tax advice. Like, do it up front.
Absolutely spot on. 100% agree, mate. And it comes back to those second and third round consequences that you've spoken so well about. It's if you're going to contemplate something, have a look at what the real impact is, because that affects share investors and traders. It affects property investors and traders. A lot of the homework we do for investors is to look at what the long-term tax impacts are, to look at what the true bottom line performance of that asset is. Because if you're not, you're only looking at half the equation, not what the impact on your hip pocket and therefore your life is going to be when that eventuates. So
yeah, totally. And I think just by doing the work up front, I would have saved hundreds of thousands of dollars in tax over time had I not done structured things the way I have.
Yeah.
And that's frustrating, It's frustrating. But, we also live in a country where we have a social welfare net. And, as I said earlier, I was on the dole there when my business failed for a period. And, gee whiz, I was grateful to live in a country where that was available because, I needed it desperately. And it was manna from heaven at the time.
Yeah.
So, you got to pay tax, but it's just a function of, not overdoing it if you don't have to.
Dead right. Now, switching back into the investment arena for a minute, what's both the worst and the best piece of investment advice that you've ever received to date?
Bushy, I've told you both of them, actually. I reckon the worst piece was, if you're bearish, sell your home. That was a shocker. And it wasn't really advice. It was more of a taunt.
I was going to say, he was challenging you, mate.
He was. Yeah, and I'd say the best, and again, I've talked about my cousin, but that notion of dealing yourself into the game. Yeah, that is such a great thing. I mean, it's a personality thing, but I have a very strong, I love the idea of having some upside in stuff.
Yeah.
And so having just, even if it's 10, 15, 20% of, capacity to generate some upside is such a good thing. It's a great thing for my soul, because I feel like, there's opportunity in the world and I'm part of it, giving myself a chance. So, dealing yourself into the game inside Monopoly and then in the world is a great piece of advice for me.
Yeah, I think it's a great piece of advice for anyone. And, to those listeners who own a business, I know in our business, we make sure that we don't believe in salaries. We believe in sharing the love. And a couple of things happen with that. If you're doing that and they've got skin in the game, then they're more committed to it. They're more interested in the end result. They get a lot more satisfaction out of the exercise, and it becomes a self-generating, self-propelling exercise when everyone has that upside commitment. So I think everyone wins in that scenario, and it's something that we don't see enough of generally, whether it be investment or business or what have you. But if you're creating an opportunities where the more someone wins, everyone wins, and if you lose, then everyone shares the pain, then you've got a much more committed and unified group that's trying to achieve a goal.
Yeah.
Now, Brent, the final one, mate. I'd love you to describe a personal habit that you feel contributes most to your investment success.
The most glaring and obvious habit would be that I now consult my wife.
Yeah.
And she's not an investor. She's a speech pathologist. But what she brings is a completely different question to the table. So it just makes me think about the issue at hand differently.
Yeah.
Which so it just gives me pause, and it also obviously makes, we're a team in this. It's our money. It's not my money. So that's important. But it does make me a better investor, no question. Having someone in your life that that you are accountable to is a helpful thing.
It is, and that's a beautiful segue into, while we've touched on what you do, I'd love to close on this before I ask you the big final question, because I'm assuming here that part of what you do in relation to your coaching activity involved to some degree an investor having to look at someone else in the eye and commit to what they're doing, and then know that someone's going to be looking at what they've done. Can I get you to sort of just to summarise where, if the listeners are interested in reaching out to you and getting your assistance, and you've touched on this already, but who should they be, and how can you assist them?
Yeah, I think firstly that idea that, you've heard, Bushy, that I've made more mistakes than just about anyone, or at least, if there's an Olympic medal for it, I'm on the podium.
So I'm with you there, mate.
So there's with who I work with, whether it be a private trader or a private investor or a hedge fund manager, there's no judgment in the space, because there's nothing that you could actually do that would be a source of shame when talking with me. So, that would be the first thing I'd say. And I sort of look at coaching a little bit like parenthood, and that's not to be condescending or patronising. It's actually, there was a book back in I don't know when it was written, but I read it around about the time I was a new father, new parent, and it was by a guy called Steven Pinker, and it was called The Blank Slate. And he talked to this idea that how kids turn out they're like 50% is genetic. So you punt up as a parent, and 50% of who the kid turns out you've done at conception.
Yeah.
40% of who the kid turns out to be is peer group behavioural, and only 10% of who the kid turns out to be is parental behavioural, right? And at the time, I was racked with enough self-doubt to actually feel nothing but relief when I read that. But I actually, around coaching, firstly, as a parent, I recognise that 10% is the marginal 10%. So, it's the 10% that when you're under stress, and your world's collapsing around you, what do you hear? Well, you hear, Davey, don't beat yourself up, mate. There's plenty of people in the world that'll do that for you. Like, that's my dad talking to me in a moment of stress. So the marginal 10% makes all the difference to performance, to life, to what who you turn out to be. And so if you think of it as a bell curve or a normal distribution, like most of who we are as people is kind of all common. And so if I think of that in the context of coaching, well, coaches are a bit the same, in the sense that, they only make a difference at the margin, but it's that extra 10 or 15% that the coach helps to bring to the table that can make all the difference to performance, particularly in hyper-competitive worlds like, trading and investing. So, I think having a coach, obviously I'm talking my own book, but, is a pretty helpful thing because I reflect back, I ask questions, and I bring, a consultant to the table at the same time as a coach, and that I have some technical expertise around the subject matter. So, I'm able to help people to actually ask the right questions around refining their process, about, ask the right questions, look at the right things to stop them falling into deep holes. And, that's, I enjoy doing that. It's pretty liberating. And as a coach, lastly, a good coach will see someone for their greatness, if you like. And, I really enjoy holding people to that. I choose to see that in people. And it's a really nice thing when the people you work with begin to incorporate that way of being into what they're doing.
Yeah, it's helping people to see their own potential. And then as soon as they can visualise that potential, that becomes its own magnet, its own compass.
Yeah.
I wouldn't underestimate or undervalue just how important that is.
Yeah. And look, as I said earlier, Bushy, I think, process is, 80% of the battle here. So, if there's anyone in your audience that's, has been trading for a while and wants to sharpen their process, well, by all means get in touch, and we just do a simple diagnostic. It's a trader diagnostic. We look at some of your data and we'll give you some insights straight up, and that's, that's an easy way to sort of see as a weather vane to see whether you're on track to something that's going to end up causing you grief or making you money.
Yeah, love it. Perfect, mate. Final question then. It's a big one. If I gave you a microphone that spoke to every single one of the approximately 7.7 billion people that are currently alive in the world, and I gave you 60 seconds to talk, what would you say?
Bushy, I don't think it would take 60 seconds. Let's see. I would want to bring personal responsibility back onto the table. And there's no better quote than from a book I've studied for years and years and years, and it's not for everyone's taste, but for me, it's called A Course in Miracles, which I've just, I've been read forever and ever and ever. And it basically says this: I am responsible for what I see. I choose the feelings that I experience and decide upon the goal I would achieve. And everything that seems to happen to me, I ask for and receive as I have asked. And basically, all I'm trying to say, or all the book is trying to say in that point, is actually you are responsible for your experience in the world. That can be a bit discombobulating for some, but I'd like to bring personal responsibility back onto the table.
Yeah, mate, that is music to my ears. David, in a world where we're so quick to point the finger, in a quite a gutless world, in my view, where social media gives people the impression that it's okay to indiscriminately criticise everyone and everything without every basis, without ever having a look in the mirror and saying, well, how did I contribute to this situation and what do I need to learn from it and how am I going to do it differently? If we could just bring personal responsibility back into everyone's focus, the world would be a much happier place.
Yeah, so, right.
Yeah, beautiful way to end it, mate. Love the conversation. I'm looking forward to having you back on board because there's a lot of subjects that I'd like to deep dive further on with you if you're open to it. But just to state the bleeding obvious, for those who do want to reach out to you to tap into a number of opportunities that you've mentioned, and the discussion you had around the self-care exercise, I think has some potential merit for anyone and everyone, and you can decide who's appropriate to do that. But I think that could be potentially life-changing. Where do they do that? How do they do that, mate?
Bushy, they can go to my website, which is davidhobart.com. It's pretty hard to get your head around. Or you can send me an email at davidhobart.com. So if you wanted to find out more about the self-care program, or if you wanted to find out more about doing, for example, a trader diagnostic, just send me an email and ask. It's pretty straightforward.
Easy, mate. Fantastic, mate. Really appreciate your time, David. It's been I've really enjoyed the conversation, mate. Big time. I know the listeners will, so we're looking forward to continuing the discussion.
Likewise, Bushy. Thanks very much. It's been great.
Thanks, Dave. Cheers, mate. Talk soon. Bye.
Well, freedom fighters, how good was that? To get a summary of all this investment gold in the show notes, just email me on hello@khgroup.com.au. It's HELLO@khgroup.com.au. Or check us out at www.bushymartin.com.au/get invested. I look forward to joining you next week for another episode of the Get Invested podcast. So thanks for listening, and as always, dream as if you live forever and live as if you die